Good afternoon, good morning, good evening, everywhere you are, my friends. My name is Akibade Adelale Paul. I'm a chartered accountant. I'm a tax practitioner, uh, and I also an account tutor. I also like to impart knowledge into the young ones. Today, I thought of having a class with you. The class is going to be today. I'm having a class practically on Yoruba language or in Yoruba, sorry, in Yoruba language. This is financial accounting made simple in Yoruba language. Uh, Over time, I've thought of it as a way of imparting knowledge to the young ones around. I noticed that our mother dialect is one of the languages that will help us achieve a lot. Therefore, in my years of imparting knowledge, I've come across, I've noticed that it is rather we use the mother dialect or mother language to teach and it will go a long way. So these are today we are going to be looking at financial accounting made simple in Yoruba language. So today I'm going to start with a topic called bank reconciliation statement. BRS short for. Bank reconciliation statement. This is one of the topics in financial accounting. Ṣẹ́rí bank reconciliation statement, when we talk of bank reconciliation statement, kí la mean by bank reconciliation statement? It is a statement that is usually prepared by the account holder. Àwọn account holder ló máa prepare statement rẹ̀. In most cases, tán bá ti rí pé there are differences between their bank statement and their cash book. Say for example, gẹ́gẹ́ bí èèyàn tó bá wò pé nínú bank statement tí òun gbà ní bank, tó bá rí pé ó yàtọ̀ sí iye tí òun rò pé òun ní nínú àkáǹtì ní bank as an individual account holder. Ẹ lè wò pé mo gba bóyá nísìnyí nínú owó iye tèmi ń rò gẹ́gẹ́ pé mo ní nínú àkáǹtì 20,000 naira, but nígbà tí màá gba bank statement mi tí báǹkì fún mi, mò ń rí i pé mo ní 15,000 naira. So therefore there is a discrepancy. Ìyàtọ̀ ti wà láàárín àwọn méjèèjì. Tí ìyàtọ̀ bá dẹ̀ ti wà láàárín àwọn méjèèjì bẹ́ẹ̀ yẹn, ó ní í ṣe pé kí a wá ṣe kí ni ká ṣe nǹkan tó pè ní bank reconciliation statement. That is, we want to make the two of them to agree. We want to ensure that the bank statement agrees with the cash book. A ní láti wò pé okay, nǹkan tí mo bá nínú cash book mi ó gbọ́dọ̀ the same mọ́ nǹkan tí ó bá wà nínú bank statement mi. So therefore, I'm going to be breaking it down for you to know. To start with, kí gangan ní tá a bá ń sọ̀rọ̀ nípa bank reconciliation statement, àwọn nǹkan wà tí a máa ń láti mọ̀. Òun ni àkọ́kọ́ ni pé a gbọ́dọ̀ mọ̀ nǹkan tí wọ́n ń pè ní cash book, a gbọ́dọ̀ mọ̀ nǹkan tí wọ́n ń pè ní bank statement. Cash book, bank statement wa, then a ṣẹ̀ wá sọ ọ̀rọ̀ nípa bank reconciliation statement. Bank reconciliation statement. Àkọ́kọ́ ni wípé kí ni à ń pè ní cash book? Cash book ni àkáǹtì tí ènìyàn fúnra rẹ̀ tó prepare fún ara rẹ̀ tí ó fi ń mọ owó tóun ná àti owó tóun gbà wọlé. Basically, cash book is a book that shows the cash and bank transaction of an account holder. Cash book ló máa show gbogbo nǹkan tí ẹni tó ní àkáǹtì yẹn tí ó ti ṣe nípa gbogbo ọjà tó tà, gbogbo àwọn transaction tó bá ṣe tó jọ mọ́ cash àbí tó bá jẹ mọ́ bank. So then we also have what we call bank statement. Bank statement, gbogbo wa la máa mọ̀ nǹkan tó jẹ́ bank statement. Bank statement yìí, this is a bank statement is a statement that is prepared by the bank to show the transaction that transpire between the customer, that is account holder, and the bank. So bank statement ló máa show, àwọn báǹkì ló máa ń prepare bank statement yìí. In most cases the bank will prepare and send to you to the account holder. Àwọn báǹkì ló máa ń prepare bank statement, so they prepare the bank statement and send it to the account holder. So tó bá ti prepare, ó máa show gbogbo àwọn transaction tó ti transfer between the account holder and the bank statement. Nígbà tí account holder tó send owó sí àkáǹtì ẹ̀, àbí nígbà tí èèyàn tó send owó sí àkáǹtì account holder ẹ̀, tàbí nígbà tí account holder lọ withdraw owó nínú báǹkì ẹ̀. So the bank statement will show clearly what transfer between the two of them, between the bank and between the bank statement, between the bank and between the account holder. So therefore, ordinarily I expect kí owó tí a bá ní nínú cash book wa, èyí tí a believe ó wà nínú cash book, I expect kó yẹ the same thing pẹ̀lú owó tí ó bá wà nínú bank statement wa. Say for example, nígbà tí a prepare cash book wa, balance brought forward wa at a particular time or at a particular month, bóyá fún wa ní debit of 300 naira, 300,000, èyí túmọ̀ sí wípé a ní 300,000 naira, nǹkan tó mì nìyẹn. So bank statement wa gbọ́dọ̀ máa show credit balance of the same amount of 300,000. If there is a difference between the two, tí ìyàtọ̀ bá ti wà nínú àwọn méjèèjì, ó túmọ̀ sí pé there is a need for reconciliation. A ní láti ṣe kíni, a ní láti make sure pé àwọn méjèèjì ó agree pẹ̀lú ara wọn. I'm very sure, I believe that you understand what I'm trying to say, that this is what brought about, or this is what brings about bank reconciliation statement. Tí ò bá ti sí agreement nínú cash book àti bank statement wa, kò nídìí pé à ń prepare bank reconciliation statement. If your cash book is showing 300,000 naira, tí cash book wa ń pa ní 300,000 naira debit, bank statement wa gbọ́dọ̀ máa fún wa ní 300,000 naira credit as well. Ìyẹn náà gbọ́dọ̀ máa show wa ní 300,000 naira credit. So if tí méjèèjì bá ti jẹ́ báyìí, ó ti túmọ̀ sí wípé àkáǹtì wa ó correct, and ní túmọ̀ pé a ò need láti ṣe bank reconciliation statement. But if there is a difference, probably bóyá cash book wa ń show 300,000 but cash book wa ń show 250,000, ó yẹ ká ti mọ̀ pé ìkankan ti ṣẹlẹ̀. There's a difference. So therefore, there is now a need for us to prepare what is called bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement. So kí là ń pè ní bank reconciliation statement? Our bank reconciliation statement you can also call it BRS. Our bank reconciliation statement is usually, this is a statement that is prepared by an account holder to compare the balance in the cash book with balance in the bank statement and adjust or correct where necessary. So bank reconciliation statement wa òun ni a máa ń prepare nígbà tá a bá ti gba cash book wa, tá a ti gba bank statement, tá a bá wá rí pé ìyàtọ̀ wà nínú balances àwọn méjèèjì, àwa máa rí pé ó nídìí ká ṣe kíni, ó nídìí ká prepare what is called bank reconciliation statement. We say bank reconciliation statement is a statement that is prepared by an account holder to compare the balance in the cash book with the balance in the bank statement and adjust or correct where necessary. Nígbà tá a bá ti prepare òun la máa fi prepare láti compare balance tó bá wà níbí. Nígbà tá a bá ti wá rí pé there is a different one way or the other, by doing this one automatically a máa identify àwọn differences in, because in doing bank reconciliation statement obviously you are matching figures against figure. A match figure tó wà ní bank statement wa, a match against èyí tó wà ní cash book wa, a match ẹ̀ bẹ́ẹ̀. So tá bá ti wá rí pé ìkan wà níbì kan tí a lè match, a ti mọ̀ pé èyí tó bá wà níbì kan tí a lè match ní other side yẹn òun ló cause ìyàtọ̀ tí ó wà láàárín àwọn méjèèjì. In that way we will be able to reconcile and do the needful. Are we together? So there are so many reasons. What are the reasons? What are those things that could cause bank reconciliation, that cause the discrepancies between the cash book? I mean, kí làwọn nǹkan tí ó lè fà kí cash book wa kó má the same mọ́ bank statement wa? Before we go into that, a máa kọ́kọ́ mọ importance àti purpose of bank reconciliation statement. Importance and purpose of bank reconciliation statement. I will mention two importance or three importance of bank reconciliation. Ìwúlò bank reconciliation statement wa. Kí ni ìwúlò bank reconciliation statement wa? Purpose or importance of bank reconciliation statement. Say purpose of BRS, that is purpose of bank. Number one is to detect error or fraud. To detect error or fraud. Bank reconciliation statement, a lè fi bank reconciliation statement wa, a lè fi detect error àbí kẹ̀ fraud. Torí pé nígbà mìíràn wà táwọn èèyàn bá fẹ́ ṣe fraud àbí tó bá fẹ́ ṣe fraud, wọ́n lè perpetrate fraud yẹn through the bank statement or whatever. But nígbà tá a bá ti compare méjèèjì, a máa rí dájú wípé there is a difference. That difference could be a figure that you as an account holder, ìwọ kọ́ ló authorize irú different ló authorize the figure yẹn. Therefore, the bank reconciliation will be able to detect this error. Number two is ó máa help what to ensure accuracy. No, to ensure business knows its position. Ó máa help business láti mọ position ẹ̀, that is ó máa ń jẹ́ ká mọ by saying position mo mean pé ó máa ń jẹ́ ká mọ true position of the cash balance or bank balance. Few points tí mo fẹ́ raise fún wa lénìí nìyẹn, purpose of bank reconciliation. Ó máa ń jẹ́ ká mọ ká lè detect error or fraud. Ó dẹ̀ máa ń jẹ́ ká mọ ibi tí balance ta nínú àkáǹtì wa tó jẹ́. Now, what are those things? Those things that can cause reasons for disagreement. Between bank statement and cash book. So reason tí a máa ní disagreement nínú cash book wa àti bank statement wa. This one is a long reasons. It's a long reason. We have about 11 reasons that could cause disagreement between the cash book and the bank statement. So, but today we're going to look at few of them. I'm very sure in my next class, we'll be able to look into the remaining part of the reasons that could cause. But today, probably a lè wo bí méjì sí mẹ́ta nínú ẹ̀ kó tó di pé I call it a day. So feel free to subscribe and share my video and watch out for the next part of the class. So number one nínú eléyìí ni pé number one, a ní kan tá à ń pè ní unpresented check. Unpresented check. So kí ni à ń pè ní unpresented check? Unpresented check ni check tí account holder tó ti issue, account holder issue the check, account holder ti issue check yẹn fún customer or fún ènìyàn kan pé kí ó lọ withdraw owó yẹn, but unfortunately fún ẹni yẹn ò tí ì lọ present check yẹn ní bank for withdrawing, kò tí ì dé bank láti lọ withdraw owó yẹn. So at the time tí account holder call fún bank statement, the person tí ó issue check yẹn fún kò tí ì gba check yẹn yet. Let me repeat myself again. So I come again, I say, when we talk of bank unpresented check, kí ni unpresented check? Unpresented check means that it is a check issued by the account holder to his customer for collection at the bank. Ó ti issue ẹ̀ fún customer ẹ̀ pé gba 200,000 lélẹ̀, gbà lọ gbà ní bank. Automatically nígbà tí account holder yẹn tó ti issue check yẹn, in his own cash book, nínú cash book ó ti máa lọ credit rẹ̀ pé mo ti sọ 200,000 jáde nínú owó tí mo ní ní bank. Meanwhile, ó ti expect pé kí customer yẹn kó lọ sí bank kó lọ gba owó yẹn, ṣùgbọ́n due to one thing or the other, probably the customer is busy or bí ó busy bí kò rí kan tó bí kò ráyè àwọn ẹ̀bà, kò tí ì lọ gba owó yẹn ní bank. So for that reason, owó yẹn ò tí ì kúrò ní bank, ó sì wà nínú account holder yẹn. In other words, nígbà tí account holder bá máa gba statement yẹn, ó máa rí pé owó tí òun expect kó rí nínú bank òun ó ju owó tí òun expect. So what do we understand by let me put it that this? This is a check issued by the account holder to his customer to collect at the bank, but the customer has not presented it for payment at the bank yet. Had not presented it at the bank yet. At the time of preparing the statement. So like I was saying, unpresented check is the check issued by the account holder to his customer to collect at the bank, but the customer has not yet presented it for payment at the bank yet at the time of preparing this statement. So obviously this will cause a disagreement. So say for example the money is 500,000 naira, and this money has been issued out by the account holder. Automatically what the account holder would have done, let's assume this is the cash book and this is the bank statement, and this is the credit side, this is the debit side, credit and this is debit side. Automatically the account holder will have come in and debited that 500 naira, and credited that 500 naira in his cash book. The account holder will have come in and credited 500,000 naira in his cash book. So which is expected to be debited in the bank statement. That if the customer yẹn bá ti present ẹ̀ ní bank will have debited the customer, would have debited the account holder with this same amount. But unfortunately ẹni customer yẹn ò tí mú lọ sí bank láti jẹ́ kí bank debit account yẹn. So at the end of the day, nígbà tí account holder bá ní ẹ fún mi ní bank statement mo fẹ́ wò, á wá máa rí wípé owó tó wà nínú báǹkì yẹn ó ju owó tó wà nínú àkáǹtì òun, ó fi 500 naira ju owó tó wà nínú cash book òun, because òun ti yọ kúrò nínú cash book òun ṣùgbọ́n bank ò tí ì ṣe kí ni wọn ò tí ì debit owó yẹn because ẹni tó fún ní owó yẹn kò tí ì wá drop owó yẹn, kò tí ì wá sí bank láti wá gbowó yẹn. Now while we are looking at these reasons or these differences, we will also be looking at the effect. What is the effect of this transaction? Kí ni máa cause? Ó mean wípé the effect is that the cash book will have a higher balance. Sorry, the cash book will have a lower balance, while the bank statement will have a higher balance. Effect tó máa fún wa ní pé nínú cash book wa máa ní lower balance because a ti yọ owó yẹn kúrò ní cash book wa, while our bank statement will be having a higher balance because it has not been deducted from the bank statement. Tí ìyọ kúrò ní bank statement wa, bank statement wa máa ní higher balance. Now what is the correction? How do we correct this? Or we call it action. What action is needed to be done? The action that is needed to be done is that if you want to prepare a bank reconciliation statement, we are still going to get there. Tá bá fẹ́ prepare a bank reconciliation statement wa, there are basically two methods la máa fi prepare bank reconciliation statement wa. Method kìíní ni pé a lè bẹ̀rẹ̀ pẹ̀lú balance as per cash book. Method kejì a lè bẹ̀rẹ̀ pẹ̀lú pé balance as per bank statement. So tí a bá ní irú issue báyìí, tá a bá fẹ́ lo balance as per bank statement, nígbà tó yẹ kó ní lower balance, what we do is we add to bank cash book balance. Tó bá yẹ pé balance as per cash book la fẹ́ lò, a máa add back to cash book balance wa. That is, if you are using balance as per cash book. Tó bá yẹ pé balance as per bank statement la fẹ́ lò, a máa ṣe less it from our bank statement balance. That is, if we are using as balance as per bank statement. So these are the two methods. So these are the effect of what happened. Effect kan tó ṣẹlẹ̀ ní pé cash book wa máa ní lower balance, while our bank statement will have what? Higher balance. Tá a bá fẹ́ correct ẹ̀, a máa ṣe kí tó bá pé a fẹ́ lo kíní balance as per cash book láti fi prepare bank reconciliation statement wa, kí la máa ṣe? A máa add the difference, a máa add that figure which is the unpresented share, a máa add it back to our bank statement. By the time a bá add it back to our bank statement, ó máa make bank statement wa, ó máa jẹ́ kó wá equal pẹ̀lú cash book wa, because ordinarily a yọ kúrò nínú bank statement wa àti yọ kúrò nínú cash book wa. Tá a bá add it padà sí bank cash book wa, ó máa jẹ́ kí figure tó wà ní bank statement wa kó equal figure tó wà nínú cash book wa. That is what we call reconciliation. In other words, kí la pè reconciliation? Ká make nǹkan méjì kó agree, come on the same level. Tá a bá dẹ̀ fẹ́ lo balance as per cash book wa, tá a bá fẹ́ lo balance as per bank statement wa, a máa lọ yọ unpresented check, a máa lọ yọ kúrò nínú balance as per, a máa lọ yọ kúrò nínú balance tó wà nínú bank statement wa. Tá a bá ti yọ kúrò nínú balance tó wà nínú bank statement wa, ó máa automatically equal cash book balance wa ta ní tẹ́lẹ̀. So that is how to treat unpresented check. Remember, we are looking at the reasons for the difference between unpresented reasons that can cause cash book and bank statement not to be equal. Now let's move to another reason, that is unpresented check. So let's look at another reason, which is the opposite of unpresented check. The other reason is, number 2, is uncredited check. This uncredited check is the opposite of unpresented check. So in this case now, this is a check that was given to the account holder. The account holder now, bí ó ti ṣiṣẹ́ fún customer ẹ̀ kan, bí ó ti ṣiṣẹ́ fún client ẹ̀ kan, so client ẹ̀ ti wá fún ní owó check yẹn, so ti fún ní check yẹn, so check tí client ẹ̀ ti, because òun ti receive owó yẹn, the account holder will go to his own cash book, á lọ debit ẹ̀ pé ó ti gbà. Ẹ rántí pé in the golden rules of accounting, ó sọ pé debit the receiver, credit the giver. That is your cash book. So because òun receive owó yẹn, ó máa lọ debit ẹ̀ nínú cash book ẹ̀ pé òun ti receive owó yẹn. So therefore, ó máa mú check yìí lọ sí bank, fún bank láti ṣe kíni, bank gbọ́dọ̀ credit the account yẹn. But unfortunately, ìgbà tó mú bank yẹn lọ sí, tó mú owó yẹn lọ sí bank has not credited the account as at the time tó fi prepare or tó fi kọ́ fún bank statement automatically nínú cash book ó máa ní owó tó pọ̀ nínú cash book. Why in the bank statement ó máa ní owó tó less because bank kò tí credit ẹ̀ ní that same amount. So let's have it this way: uncredited check is a check received from a client and lodged in the bank, but the but has not been credited by the bank. Again, uncredited check is a check received from a client and lodged in the bank but has not been credited to the bank, credited by the bank. Kí ni effect eléyìí? Effect ẹ̀ ni wípé the effect is that the cash book will have a higher balance because we have treated this as a receipt. A ti gbà á bí wọ́n ṣe fún wa ní ṣẹ́ẹ̀kì yẹn, a ti lọ sí cash book wa àti pé owó báyìí ti wọlé, a ti debit cash book wa, so a dẹ̀ ti mú lọ sí bank. Ó yẹ kí báǹkì ṣe kí ni, kan correspondingly kí báǹkì kan credit wa, but unfortunately bank has not credited us for one reason or the other. So bank statement wa, kí ni bank statement? Our bank statement will have a lower balance. That is the effect. Now, what is the action taken? Action wo la gbọ́dọ̀ take láti reconcile it? The action náà ẹ note kankan. From the effect you should know what you are going to do. Note it. Níbi effect yẹn, anyway tẹ́ bá ti rí pé ó ti ní higher, tá bá fẹ́ correct ẹ̀, a máa ṣe kí ni? A máa less ẹ̀. Ibi tó bá ti ní lower, tá bá fẹ́ correct ẹ̀, a máa add ẹ̀. It's very simple as ABC like that. So now, the effect is that the cash book, if you want to use your cash book as your bank balance as your cash book as your bank procedure method, say you do what, since it's higher, you say less that amount from the cash book. That is when we are using balance as per cash book. Tí a bá ń lo balance as cash book láti correct tó bá balance as cash book la fẹ́ fi ṣe reconciliation wa, when you have something like uncredited, you do what, you less it from your balance in the cash book. Then if you are using balance as per bank statement, a máa ṣe kí ni, since tó yẹ kó ń lo, a máa ní add to balance as per bank statement. That is balance as per bank statement. I believe you are following me and I believe you are getting it. If there's any question, you can put it in the comment section and ask the question in case you have any question so that we can treat it together. Now, this is the second reason that can cause unpresented check, that can cause disagreement between cash book and bank statement. There's another point, the third one, another one, number three. The third one, number three, is what we call, there's what we call credit transfer. Credit transfer is, this is money, or this is an amount of money received directly into the bank statement. Received directly in the bank statement. So credit transfer, like you said, òun ni owó tó yẹ pé directly, maybe you have asked for money from somebody, bí ẹ ti gbé owó lọ́wọ́ yẹn, àbí èèyàn kan jẹ yín lówó, let me put it this way, bóyá èèyàn kan jẹ business yín lówó for a long time. Now, this person is not ready to pay your money, but probably ẹni fẹ́ surprise yín kò tiẹ̀ sọ fún yín pé máa send owó sí yín withdraw, ẹni yẹn kàn send owó yẹn directly sí báǹkì yín. So in those days ní ayé ìgbà tó yẹ pé báǹkì ò tiẹ̀ fún yàn ní alert sọ̀rọ̀ bí wọ́n á gbọ́ irú kéèsì máa ń common gan, but even these days gan-an ó lè common tẹ́ bá ní network issues, tó bá ní network problem, ẹni yẹn máa ti send owó yẹn sí account, ó kàn send owó sí account yìí sínú account ní bank dẹ̀ ti credit yín straight, but because you are not aware, nítorí pé wọ́n sọ fún yín, kò sọ fún yín pé ó tó send owó yẹn, kò dẹ̀ sọ ìgbà tó ti send owó, kó o ti send owó, ẹ̀yin ò ní tí update card book yín. So in other words, your bank statement ó máa ní higher balance compared to your cash book, because you are not in the know that a sum of money has been sent to your account. Wọn ò sọ fún yín pé wọ́n ti send owó sí. So effect eléyìí ni wípé, what is the effect of this? The effect is that your cash book will have a lower balance. Your cash book will have a lower balance because you were not told that owó ti wọlé ní àkáǹtì nìkan lówó wọlé sí nínú báǹkì yìí, cash, because you know this thing, cash book yẹn nǹkan tí ẹ̀yin cash book yẹn ilẹ̀ ń prepare, ẹ̀yin lẹ máa tó bá ti wọlé, ẹ̀yin lẹ máa mọ̀, tó bá jáde ẹ̀yin lẹ máa mọ̀, but bank statement yẹn báǹkì ló ń prepare, tó bá wọlé tó bá jáde àwọn ló máa mọ̀. So ẹ lè má mọ̀ bóyá owó wọlé àbí owó jáde not until tẹ bá kọ́ fún bank statement. We are looking at this based on what is being operated or what is operating in those days, unlike now tó yẹ pé a máa ní alert, ẹ mọ̀ yìí sì pé ó bá wọlé tó bá jáde ẹ máa mọ̀, even with that alert tí à ń gbà yá bí a lè fi ṣe reconciliation wa. So it can also happen pé owó máa wọnú àkáǹtì yìí tí alert tí ẹ̀dẹ̀ ní rí alert. Ó ti ṣẹlẹ̀ several times lọ́pọ̀ bí èèyàn ń jẹ yín lówó ń sin ẹ̀dẹ̀ tí ń ba pa ẹ̀ tí ń kí fún owó mi dà kò fún mi lówó tó ń bó ti send owó sẹ́wọ̀n tí send owó sí mi tó mi rí alert lóòótọ́ ti bí ẹ wá lọ sí bí ẹ lọ sí app mi ẹ wá lọ wo balance pé ó ti add up ní balance yìí, or bóyá ẹ lọ sí báńkì ẹ fún mi ní statement ẹ wá rí nínú statement yìí, irú àwọn kéèsì bẹ́ẹ̀ lélẹ̀, what we call credit transfer. It has been sent to your account directly without you being notified. Wọn ò sọ fún yín, wọ́n kàn send owó sí àkáǹtì. In other words, bank máa credit account yìí directly without you knowing. So cash book yìí máa ní lower balance while your bank statement will have a higher balance compared to your cash book. So what is the action here? The action here is that like I told you earlier on, ni pé tẹ́ bá ti fẹ́ wo báwo lè ṣe fẹ́ correct error tó bá ti ṣẹlẹ̀ yìí, èyí tó bá yẹ kó ní lower balance a máa add sí, èyí tó bá ní higher balance a máa remove from it. So if you are using your balance as per cash book as the method, this is cash book, you add, since it's having a lower balance, you add to your cash book, add the figure to your cash book, then less it from your bank statement. If you are using any of this method, if it is balance as per cash book là ń lò, tó bá dẹ̀ pé balance as per bank statement ni à ń lò. Sorry. So this is the third part. Because of our time, I'm going to stop at the fourth one. Màá dẹ́ni dúró lórí number 4 ní èyí. So by God's grace, we conclude or we continue from my in the next class. So which we are going to see next. So if you love this class, never love class. If you love this class, if you want us to continue, subscribe, share, and make comments. This is just an innovation that I feel like might help majority of us, because I believe that if practically we are teaching our the students in the language that they understand basically, or their mother tongue, it goes a long way in imparting knowledge. So if you truly want this class to continue, please feel free to share this video, feel free to make comments if you feel like there's any adjustment that you want us to do, and also you can also drop it in your comments any other topics that you would like us to teach under in financial accounting, even if in any other subject tó bá relate to finances. You can also drop comments if you want us to take any topic in economics in Yoruba language, if you want us to take any topic in commerce in Yoruba language, if you want us to take any topic in cost accounting in Yoruba language, anything relating to finances and accounting. So by God's grace, we'll be able to break it down for you in Yoruba language. So in our next video, we are going to be looking at other reasons that can cause disagreement. Like I told you níbẹ̀rẹ̀ pé I need about 11 reasons, more than 11 reasons that will cause disagreement between cash book and bank reconciliation statement. So I will be taking it one after the other, and I will need your better understanding. Má fẹ́ kẹ́ understand ẹ̀ dáadáa before we now go into the bank reconciliation statement properly, because tí a bá ti list out gbogbo àwọn reasons yẹn and why the causes, the effect of them and the action. Ordinarily, if you are able to get all this, tẹ́ bá ti mọ effect tí ìkọ̀ọ̀kan lára àwọn reasons yìí máa cause wa, tẹ́ bá dẹ̀ tí mo bá máa ṣe action tá máa take, that is how do we solve it. In fact, ẹ ti parí bank reconciliation statement. So tá bá ti lè wo àwọn reasons yẹn 11 or 12 about it, tá bá ti wò wọ́n tán bẹ́ẹ̀, àwa create a question, àwa look at one or two questions by solving it. As a matter of fact, let me tell you the fact, bank reconciliation statement is one of the simplest topics in accounting. And as a matter of fact, if you are the one preparing for WAEC, if you are a student preparing for WAEC, I tell you and I bet you, this topic is a very common topic tí WAEC man test a lot. So please always take your time to watch this video to the end.